Our next guest says his comments could be the difference maker for markets going forward. Jerry Castellini joins us now. He's Chief Investment Officer at CastleArk Management. Jerry, welcome. Why is Powell's speech such a big deal?
It's more because people are not positioned. They're so anxious about this speech. They're so worried that he'll give one like he did last year. And at the same time, the underlying economic trends don't seem to match that type of discussion. So I think you see a lot of hand-holding and a lot of angst on the part of professional investors right now, and you could see that in the way the stocks are lined up. Cyclical stocks have pulled back. All the big growth names are kind of hovering below where their highs were, and there's this anticipation that you will be given instructions on Friday afternoon on what to do.
And so let's kind of unpack this for a little bit, the different sets of instructions that are possible.
Sure. So inflation, if the Fed says it's not that bad, of course, fine. We're not going to worry about oil. We can't do anything about that. So we're going to go on this quiet, maybe another couple quarter basis point. That's not a big deal. That gives the investors in the conservative cyclical growth names some reason to breathe easy, and they continue to buy those. On the other hand, if they say, the Atlanta Fed's telling us there's going to be 5% GDP quarter coming up. That's way too hot. Looks like the economy's not even going to see the closest thing to a recession, and we best get into our cyclical names. So you're going to be faced in that case to jump over to some of the names that will benefit from a faster growing economy, and that's what people will be standing there with their fingers on the button.
Let me ask you a question. You cite the GDP numbers or the forecast. Some of them are high, whatever, and you say consumer sentiment is near lows. My view was that I thought consumer confidence, as measured by the Conference Board, is actually pretty strong right now. I'll grant you that if you ask people, do they think the economy is in a good place, they'll say it's not. So where is that disconnect between a strong economic growth and what you describe as consumer sentiment being at a low?
Yeah, and again, I probably should have started off. You can pick your own economic indicator right now.
Sure.
You can ask Rick or anybody. You can be bullish from one set and you can be bearish from the other. I could use one of the consumer sentiment indicators to show how concerned, like you were describing. But on the other hand, people are spending money. There's no question when you talk to retailers, the consumer spending numbers indicate a confidence going forward. And that's why I'm saying we're stuck with this contrast. Everyone is sitting on a fence because they can't yet be convinced that we're about to make the next move up or down. And so that brings up to the question, what do you own, right? Our view is when you look at what to own going into this kind of uncertainty, you should own more things with a cyclical tailwind, because those haven't been represented by the stocks yet. What's going on with Boeing, Schlumberger, and Home Depot are forward-looking economic recovery plays, but you're not buying the most beaten down cyclical at the same time. So what we're hoping is that you get enough visibility that there's going to be a tamping down of the whole inflation fight, and we let the cyclical recovery come.
So these three names that you mentioned there, Schlumberger, Boeing, and Home Depot, are ones that you favor in part because they've been in the shadows a little bit.
Exactly.